All right, gang. Well, welcome to another interview in our series, our Wealth Preservation Asset Protection series. I'm delighted today we have Marcy Pruitt, DIS, Disability Insurance Services. For those of you that have been working with me for a while or have heard me speak before, you know that I routinely talk about how important it is to protect your income. And this is what this is going to be centered around today. Marcy has a unique skill set in this space, and I'll let her kind of give a little bit of a background, kind of how she got into this, what her story is, if you will, and really why she's the expert to be talking about this.
Hey, thank you, Anthony. And as Anthony mentioned, my name is Marcy Pruitt. I'm the managing partner with Disability Insurance Services and have been wholesaling disability products for almost 30 years now. And the value of our organization as really a wholesale marketer for the sale and service of disability, we can go to multiple carriers. So whether that's a white collar, blue collar, impaired risk, high net worth, high income, we have many carriers that can solve the problem or the solution for you in protecting your income. And we work with agents like Anthony to assist in that space.
No, it's you guys have been a huge resource for me and my firm to provide some of those insights. And so along those lines, why don't we just kind of dive into just some basic statistics. We'll get into some other, I guess I'll call more substantive things, but in terms of basic statistics, and I'll just throw a few things at you. You can kind of ramble on it if you like, but how long does a disability typically last? What are some of the primary causes or reasons that people are disabled? I think that's probably a good place to start before we dive into some other factors.
Most of the disabilities are a result of an illness. So it can and does happen to everyone. Statistically, 1 in 4 people will become disabled for their working career, during their working career. And people just think it's a paraplegic, total permanent disability, and it doesn't need to be. Most Americans have less than 6 months pay to handle their lifestyle if they were to become sick or hurt and could not work. So even if you're out of work for a year or two, it could be devastating to your financial picture. The average disability duration is about 35 months. And again, that can wipe out your portfolio very quickly. Again, most bankruptcies statistically are caused by medical problems. So you have a lot riding on. Your income is what makes everything else possible.
To me, there are probably 2 or 3 primary threats to somebody's wealth. This is definitely in the top 3, if not in the top 2. Do you, because I heard you say white collar, blue collar. Do you have any numbers just like on white collar professionals in terms of, kind of those same statistics, but as it drives more towards white collar professionals, or is it not broken up that way as much?
We do have it broken up by occupations, and we tend to work with more of the white collar marketplace, attorneys, doctors, business owners, executives, high income earners. Even if you have coverage through your employer, a group LTD product, there's many shortcomings, including taxation. It's not permanent. There's a lot of offsets. So there's always room to layer on top some permanent portable insurance with the individual disability. So all your eggs aren't in the one basket through your certificate that you may hold at work. With the white collar, we offer, not to get into a lot of definitions, but the true own occupation provision, which is key for highly skilled and trained individuals to protect them, so they're never forced to go back to work. Or if they go into a new career, then they can still actually collect on the individual. So white collar claims do tend to be a little bit longer, because if a surgeon can't do surgery, for example, he can do something else, he or she can do something else, but would still be on claim possibly until age 70.
Which particularly for a surgeon or any specialty physicians, if you think about, 4 years of med school, orthopedic surgeons, 6 years of training, and others have different degrees of their training as well, already kind of starting in the hole. To not protect that income, it's one of those things that almost seems irresponsible to me, without being judgy Judgington over here. but it's just like you've spent so much time and invested so much into your career. And this is true in law. This is true in CPA. This is, business owners and so forth. Like, it just seems so natural. What would you say in your experience, outside of the fact that people in general like insurance, type of thing, what are some of the reasons primarily that you've heard anecdotally or directly of why people are just hesitant to pick up income protection?
They really don't think it'll happen to them. They think Social Security will pay. They feel, if, especially a business owner, that the business will take care of them. But if you're a constant drain on your business and you're not producing revenue, it's not going to last that long. Banks don't loan disabled people money. I mean, so where would your source of income come from? You mentioned earlier, the threats and income protection. That's the cornerstone to all of your financial planning. It's what makes all your other assets possible.
You said 35 months or 36 months is the typical length, the typical
Yes.
duration of a disability?
Duration, yes.
It makes me kind of recall what we've been going through with COVID and with the pandemic, and where, I have clients who routinely are making $500,000, $600,000, $700,000 a year, that their income, because of elective surgeries particularly, just shrunk. And there was a fair amount of panic and uncertainty. Let's stop all the investing. Let's stop putting money into our 401ks, because we didn't have maybe what they thought was a comfortable number in their emergency reserve. Heck, even if they had 3 to 6 months of fixed expenses set aside, that doesn't even scratch the surface of a 36-month protracted disability. So I wanted to come back to that because that's just such a powerful number to me, because everyone can reverse engineer the math, right, Marcy? They can say, all right, well, geez, if I'm disabled for 36 months and I'm not making income for 36 months, that's meaningful. And so I wanted to circle back with that. How many people, total disability versus partial disability, hey, I can't do the income producing duties of my specialty, kind of like that own occupation definition you described earlier. But it's versus I'll be hyperbolic. I got run over by a bus, right? Total disability versus I had something happen and now I'm maybe able to work in some capacity. Would you just kind of shed some light on that, those differences?
Well, and many claims are partial or residual in nature, because let's say you have a debilitating illness. So you are still able to work part-time until, if it's cancer and you're going through chemo or other even cognitive issues. As the illness progresses or the disease, then you start to slow down more so, either working half days or less hours each day, whatever it may be, until you become totally disabled. Or the reverse of that, you have that accident, you're totally disabled, and then you recover and you can start coming back to work part-time. So we're there on the front end and the back end during the whole duration of the claim. So the partial is a little more prevalent because, again, on the front end, and then it becomes total, or the good news is you recover and you're going to continue to get a portion of your income during that recovery period.
Gives you, if I'm hearing you right, kind of a gradual, as your income is going back up, you're not going to lose all of your disability insurance, and then the disability will gradually go off until you get back to where you were before the disability. Is that?
Exactly. Yeah.
Okay. Let me ask you this. When you think about, we talked about illness as opposed to accident being the primary drivers. Let's drill down a little bit more on that. What are the most common, I don't know, top 2 or 3, Marcy, of illnesses or issues that ultimately result in these, on average, 36-month disability periods?
Okay. Musculoskeletal is probably the number one, and that can encompass all kinds of things. Obviously, your back and other joints and muscles and neck and things like that, which are very common. Mental, nervous, drug, alcohol, stress, and anxiety. That entire pay area is also a very high statistic for disability, because it's also subjective. So it's sometimes hard to get somebody back to work, and you can't take an x-ray and measure your stress. So Many carriers have a limitation on that, although a lot of carriers do not. They treat it as any other illness. So you can decide, with your client whether you wanted that provision or not. So musculoskeletal, cardiovascular, and then just a whole array of, obviously cancer and things like that.
Right.
But your top three are musculoskeletal, cardiovascular, and mental nervous.
You mentioned group long-term disability. You said GLTD earlier, group long-term disability, for those people unfamiliar with the acronyms. What would you say to the person who says, hey, I'm good with what my employer is providing. I don't need to get individual or personal disability insurance. Is there any feedback that you might provide to that individual on why that is either a sound decision or perhaps not a sound decision?
And that's a good point. And people do falsely feel they're sufficiently covered at work. You want to know before you go on claim. That's the worst time to find out that you have a very short, it's full of shortcomings inherent in all group policies because one size fits all. First of all, it's only a 60%, sometimes 67%, but 60% of your income, typically of your salary only, not your bonus or other commission, and it's capped. So even if you think you have 60%, but there's a $6,000 or $10,000 cap, and you're making $300,000 or $500,000, you're not anywhere near 60%. And it's also taxable because the employer is usually paying for it. It's offset against Social Security and workman's comp. So that's why it's inexpensive and it's not permanent. It can be canceled by the employer if you leave your place of employment. You do not take it with you. There's no COVID provisions. So it's good to have a little bit of foundation of free coverage, if you will, if the office is paying for it. And you want to stack on the long-term, permanent, more comprehensive coverage that you are currently selling.
You used a phrase, Marcy, you said one size fits all. That always kind of rings a bell in my head, kind of that red alarm is going off.
Right.
When you say one size fits all, and tell me if I'm off on this, what I'm hearing you say is we're a business or we're a group, a practice in medicine of some kind. You and I and 15 other people are partners in that group or however it works itself out. If it's one size fits all, everyone else might be in incredible physical shape. I might be 250 pounds overweight, have neuropathy, amongst other cardiovascular, musculoskeletal and issues. I'm getting the same coverage you're getting. Does that mean that the coverage, my brain tells me it's not going to be quite as good as the individual private coverage, at least from some perspective, right?
Right, absolutely, because the employer is going to purchase a master contract and 60% to a cap of X, typically limited own occupation provisions. There are sometimes pre-existing condition clauses, but it's designed to cover you for a couple of years until Social Security kicks in. And that's why, again, it's inexpensive. And it's a composite rate, so everybody has the same rate and the same benefits and features. So just like cost of living may not be in there, where you can customize an individual plan to for your need, for your budget, and your career. And there's provisions built into it that when you, let's say you lose your group LTD because you leave the employer or you go off on your own or whatever, or as your income grows, there's features in the individual contract that would not require additional underwriting. So you can just add on to it as you develop in your career.
Presumably, and I think you may have touched on this previously, not everybody stays at their job forever. So if we're relying on that disability insurance and it's gone as soon as we leave, now we're 5, 7, 15 years older, we go to another business or another group or another modality, what have you, they may not have it, or they might have something that's no better than what you had before. So there's some degree, that portability sounds pretty important as well. If you had the ability, and again, if I'm putting you on the spot here, I apologize, because I think it's almost one of those things that you have to extrapolate, which doesn't always work. But if you had to really kind of assess what the financial impact to somebody or to a household might be in the face of, and let's just use the average, a 36-month disability time frame. Do you guys have any numbers on that or any data on that, or is that too complicated of a computation?
Well, no, we do have some claim stats on that, but it's financially devastating because if the breadwinner is no longer working and the family solely relies on that one income, other expenses come into play. That you may have to get a caretaker. The other spouse may have to go to work. You have to adjust your home and a ramp and, you know, maybe your van to get around in. I mean, there's a lot of added medical costs that come into play, and as well as the emotional impact. And if you look at your earning potential and you're 50, well, say you're 30 years old and you're making $100,000 a year. So what's your earning potential to age 65? You know, that with inflation and everything else, that right there tells you what the economic loss will be.
Yeah, no, just no longer contributing to retirement plans. I mean, just all of that. I mean, we're talking about right now potential, you know, 20 to 25 year generational changes due to the economic shutdown as a function of COVID in some parts of the country. So this is one of those things that just really resonates with me. But look, I appreciate all of your insights on this. I know you've heard me share this anecdote before, but I've been a wealth strategist now for 25 years, comprehensive wealth management, emphasis on growing and keeping what you have. There's no question that the most meaningful dialogues that I've ever had with my clients is when they had the unfortunate experience of a disability. In all of those cases, thankfully it's been few, but in all of those cases, the messaging was the same, is, man, I did not want that disability insurance. I just thought it was a wasted expense for that disability insurance. But then when they were lying in their recovery bed, doing their spreadsheets and doing the math, all of them have said the same thing. I had the peace of mind to know that my family was going to be fine. And then I realized that's why this is so important. So I just really appreciate all you guys are doing to educate folks like me, as well as the consumer base. I know you guys have a pretty large social media presence as well, to just be aware of, man, if we're talking about wealth preservation, it's not just litigation issues or asset protection in the traditional legal way. It's not just taxes. It's not just slips and falls. It's not just malpractice. It's probably one of the things people need to be considering most, right, is protecting that income. And you guys are on the front line of that. So I think that's probably a great place. Anything else you want to add or things that you want to kind of just share with folks before we wrap up today, Marcy?
I think, I mean, that's comprehensive, touching on the need, the statistics, the, you know, the quality of purchasing an individual, a quality individual product that goes with you for your entire working career. It can't be taken away. So no matter what happens down the road, you know you have that coverage, and it's best to lock it in while you're healthy and working. You do have to go through underwriting.
Absolutely. Well, Marcy, again, thank you so much for your time, for your insights. Greatly appreciated. I'm sure that we'll reconnect here again at some point on other subject matter, but thanks so much for being here today.
Thanks, Anthony.
Appreciate it.